Alright, hello folks, I'm L.A. Little and this is your daily TA wrap. Where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today and what might it tell us about the coming days. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of gorgeous Rocky Mountains, folks. I know a lot of members, quite a few members watch this show, so I was going to take just a couple minutes here at the beginning and just demonstrate a new feature we just opened up for you. If you log in, right, and you're a subscriber, you'll be able, and I've logged in as one of the subscribers here, you'll be able to see my shared list. I have shared list now. You can pop into those shared lists. Not only will you be able to get all the symbols, you'll also be able to pop up the comments if I write comments in here. So in this particular one, I don't have any useful comments, but usually when I sit down and prepare, the 10-15 minutes before the show, I jot in some notes here. And so those notes will be there for you as well. So it's kind of a useful thing. Of course, you can share a list of your own with others, and we'll be able to build up some sort of an inventory. For example, it'd be nice to have ETFs with the largest weightings, and maybe 2 or 3 members tackle something like that and keep it up to date, right, with the weighting structure so that we can actually see what's moving what. There's a lot of good things we can do here together, and we've created that facility now. Let's get to the markets. Enough for the info. What happened today? Well, we had these markets. They don't want to give it up, folks. They opened down today. Pretty big shot to the downside. Gap down, flips around, heads right back up. Dow ends up just slightly higher, 17 points, 16,530. The S&P's tacked on 3.5. They were down about 10. 1866 was the low today. Actually, even more than that, right? So anyway, they were down 14 at one point. 1884.66 at close. Composite 14 and 15 cents higher, 41.38. The NDX taxed on 17. And as you can see here, the strength was in the index again, in the NASDAQ again. We saw that rotation on Friday happening a little bit as well. And a large part of this is Apple. Apple's over 600 today. Apple's up huge weighting. And again, getting back to that weighting structure, us sharing our thoughts here, right? If we put the NDX in here, we'd be able to share those weightings and we could all see them together. What else happened? Russell. The Russell was a laggard today. That's again, right, down slightly. Russell has been the laggard, and this one doesn't have any weighting, and that's probably the reason it keeps lagging. Dollar, flat, tries to break down. We'll look at that chart. It's trying to break down to the downside. If it does, this gold market ought to break to the upside. Now, I took this snapshot a little bit late tonight, so gold was up about 13 bucks today. It's up about 8 bucks after hours. Actually, it's up about 3 or 4 bucks after hours. Looks like it's coming off a little bit right now. So 13.11, 13.12 is the close well, that's the after hours quote. We had bonds up after hours. They were down during the day. They lost about 0.5%, and oil was down, and so was copper. So what happened today? Let's pop in here. Let's look at our charts and let's talk this over. So let me get to the general markets, and here we go. Okay, so starting with the S&P. So in the S&P, we've had a range trade in place. A range trade's still in place. It still hasn't changed, right? We're still up there testing that top. We haven't blown through it yet, and we certainly haven't given it up, neither one, right? So we're still there, still pressing, still trying to get over that high. That high we're marking is this high from back here. That date was March 21st. That was where all the big volume was, and as you can see, we came off, back down. Here we are up there trying to get over it one more time. What was important today really was what didn't happen, and that is as you gap down, you head straight lower, you come into the last bar that has any volume on it in terms of recent bars, And if you just put your cursor across here and look at it, you can see that bar, which is the April 28th bar, has as much, actually has more volume than any other bar, and that was to the downside, since that big bar that we were talking about on March 21st. We came into that bar, top of that guy's 1877, we come into it, we get as low as 1866, what does it do? 27 versus 40. No volume, flips around, heads right back up. This thing's going to try to break out again tomorrow, right? You go into that, you can't trade lower. There are no sellers lower, right? We've been saying that about buyers higher. Well, no sellers lower. Can't break it down, folks. They're going to try to take it back up again. You still got the high hanging out here. If they get over this, right, we could certainly get a spike up there and test that again and see if we can get over it. I suspect it's going to try it tomorrow. Tuesdays have been the strongest day of the week for months, and so I'd be very surprised if we don't see this market try to trade up into that high tomorrow and get up there and you know, bang away at it. If we look at the and the Dow Jones set up the same way, so I'm not going to bring it up. If we flip over to the broad composite, the NASDAQ, the broad composite, all four of these, they all did the same thing. The Dow did the same thing. SPX, NASDAQ comes into that April 28th bar, doesn't have the volume, flips around. This thing's going to try to get back up here and test that breakdown bar. NDX, slightly different. The NDX actually comes into that bar, right? Less volume, but the NDX gets over the breakdown bar, 35.9964. 36.05 was the close, and from that perspective, the NDX has actually finally gotten over the key resistance that's been there. That's a big deal, and you're going to see it also over on the what is it? The sector, right? The the XLK. Right? It did the same thing on the XLK. So this is a big deal because getting over that bar is the first sign of some strength, and it is in the NDX, and a lot of that is because of Apple. Apple's such a heavy weighting in there, but you also had biotechs helping out as well. Biotech's getting a decent bounce. But to get over is a big deal, and that's what it did. So you can't, you know, I don't want to stress it too much, but I want to stress it because it's important. We haven't been able to get over it. I mean, it's been a month. That's a long time. Russell. If we look at the Russell is the weakest of the week, right? Because the Russell, not only can it not get over the high volume bar, I mean, not only did it go into it, it's been in it, right, and can't get over it. Top of that guy's 1131. This is the April 28th bar again. Now the Russell did get back outside that first hammer off the bottom, but you know, it's just meeking along here. Now I suspect it will rise up along with everything else if they bounce tomorrow, which looks to be what's coming. But it's going to have trouble getting up very far. This one is really lagging, and again, it's because it doesn't have the weighting. The weighting's just not there, and without the weighting structure to help it up, you know, it's a better reflection of the general weakness in most of the stocks. Okay, so that's the indexes, positive, right? If we flip over, look at the sectors, and I'm gonna pull in. I'm not gonna go through every one of them, but there's two or three that are worth looking at. The first one would be the XLK, because the XLK is the one we were just talking about. Breakdown bar here, April 10th, 36.50. Over it, closes over it, 36.58. Doesn't have any volume, but it's finally over it. Right? That's the first of the four. Remember, we have four of them that have that problem. XLF was the weakest today. We had more bad news in the financial sectors. JP Morgan comes out, talks about, I think, something like 20% less earnings expected over this next second quarter. And that really, you know, I didn't look at JP in particular, but I think they probably got hammered pretty good today, and they did. They take out another low, they do it with volume. JP Morgan, well, actually they didn't do it with volume. 266, they do 251, so a little less volume. So actually on a day where you'd say you're going to have 20% less earnings, that's not too bad of a move. That's because they've already made a big move. But that is, at least on a weekly basis, that's probably going to set up an ABCD down. And it does, right? So that's a big ABCD structure. That can come down here and test all these lows from the top. So JP Morgan, bad news. Financials, they can't get going. XLV was the other one. Now, biotech was helping it today. It's coming back up. It's coming to test that same area. And the XLY a little bit farther back, but also trying to come back up there. So the 4 weakest sectors, they all look like they're going to, well, 3 of the 4 look like they're going to come back and test. One of them's already broken over. And the XLF being the weakest. And I think that was it for the sectors. The rest of them really just range bound, nothing special. If we go over and look at the ox markets, you know, we've been watching and commenting on the bonds. Well, the bonds today started to give some back finally, and I was wondering if they might, you know, given the spike up in volume and price into, on a weekly basis, right, into what is going to be a serious resistance zone as it gets there. That zone, we got right to the bottom of it today. You got volume over there on a weekly basis of 50. Last week you did 44. So you're coming into it, you don't have as much volume. It's going to be hard to push over that. I suspect it's going to try to get to this top, which is 114 on the weekly. But it's going to be a chore to get there, and it's going to chop around trying to get there. So we got up to 113, only a buck away. Pulls back today. It's coming back into this little high. You know, nothing bad here. It's just pulling back. It did come back in 112.08, 112.03, and closed inside that other second of the 2 big bars. So I wouldn't be surprised to see this pull back a little bit more, and then flip around and another ABCD structure. The bond market, if you've been trading this has been a great vehicle. And I know, you know, I know some of the subscribers have been doing it. I've personally been doing it. It's, you know, every time you get these ABCD structures, they play out. And, you know, what better way to trade than to get those kinds of trades, right? And they've been playing them out over and over and over again. One after another, and it's just been great trading. You know, it's like easy pickings. Get a pullback here, you're going to set up another one, right? Same sort of thing. So watch for that. Watch for it come back into the zone here. If it finds support into here, which it probably will, flips around, goes back the other way. This continues to work higher, yet, and this is a positive. As bonds work higher, the market, as measured by the SPX, is not giving it up, right? The S&P 500s. They just keep going sideways. The best thing you can do, and I said this to subscribers like, you know, 3 weeks ago, the best thing this market could do would be to find a way to just go sideways while the bonds go up, and right, and just hang. And that is what it's doing. Now, you know, the problem is, of course, that you can break down at any point. But so far, I mean, what a beautiful way to work off this excess from the last year, in that you don't even give it up. You just grind it out up there, right? I mean, that's probably the most bullish scenario if, in fact, the market can not only hang up here, but eventually break higher and really start heading up again. But that's a ways off, right? Let's see here, dollars. So the dollar just hangs, and it's trying to break down, but it just got nothing as it's down there. So it looks to me like the dollar's going to try to bounce, which leads me to gold usually. And gold gets that follow through that we were looking for. It jumps over this price point from April 15th. Doesn't have the volume, right? Jumps over it. Doesn't have a beautiful candle or anything, but it got over it. And so now gold has that little area as its support zone, which is kind of a nice thing if you bought in down here. And it's going to shoot for these highs. It's going to shoot for this. This is the zone that's going to show up now. It's going to look for that zone. That's where it's going to try to target. So if you made this, if you made it into gold, don't be surprised to see some sort of a pullback ABCD structure to get it up there. That's where it wants to head, and it wouldn't be surprising to see that kind of a pattern develop here. Silver, same sort of thing. Silver really couldn't get going today. Silver a little bit weaker than gold. Is just hanging up there inside at the highs. So no volume, just hanging there. Let's see here. What else? Oh, I wanted to look at commodities. So I'm going to go to the continuous commodity index. And one of the things we continue to see, I'm not going to go to that one. I'm going to go to, let's go to the ETF, because this one has such a big spike. I got to go check that out and see if it's real. I don't think that's a real number. Here's the RJA, which is a fairly equal weighted ETN, the Rogers International Commodity Ag Index. And this ETF, you can see, this is what I wanted to show, is that you had a range here, right? And somebody asked me about DBA last night, what I thought about it. You had a range there. Well, it held multiple tests here. It's going to try to make it right up to the top of the range. So if you're looking at whether or not inflation is going to come in from the agricultural, from the commodity side, it certainly looks like it's building a case to go higher again. And I mean, we're not talking rampant inflation or anything, but certainly there is an inflationary pulse going on with respect to this. ABCD structure would get you about to that target I just drew. So this looks pretty positive. Let me go back and look at the DBA. We looked at it last night, and I think it probably bounced a little bit today. Yeah, nothing special, but it will bounce. This one's also going to try to go higher. The ag market in general, commodities are going to try to go higher. Okay, let's see what kind of questions you have for me. Now, what do I think about CLMS? If you have a question, you want to text it to me, you can do that at 303-912-9110. If you want to shoot an email to me, support@TA Today, I can pick it up there for you and we can see what you got. And I'll try to help you out. CLMS. Okay, so asset management. You picked it up today. Oh, Friday. What do I think about it on the weekly? Let's see what the weekly looks like. Looks all right on daily. Yeah. I mean, he's coming back in, fading into support. I mean, that's the sort of place you want to buy it. So, you just, when you're trading off the weekly, then you're going to have to use weekly stops, which means they're going to be wider, which is probably what you want to do right now. There's a nice big bar of support over here at 1141. So I would think somewhere underneath there would probably be the ideal spot. But yeah, it looks fine. It got... You're pretty good at picking these that have all these multiple swing points. So this one actually broke 3 swing points. You should get 2 to 3 bars on that time frame extension. You can see here how it doesn't want to give it up, even though it got 4 down, and it's still hanging there. Now, the risk, of course, is that this is, if you're using the old school bear flag type stuff, that's like a bear flag, right? There's your flag. Which says it should break down. I don't always, not always, I don't believe that stuff, right? And I think that what happens in classical, and I'm gonna take a few minutes here because it's a great example. In the classical literature, this is a bear flag. And the ideal is that this will trade lower, right? It will break to the downside. And maybe we have to look at this in 4 or 5 days from now. Classical TA simply looks at the pattern, right? Here's the pattern. I've seen it before. Bang, repeat, short it. Okay, it doesn't even pay any attention, though, to supply and demand. And this is what I really talk about all the time. Where's the supply and demand, right? Well, there's definitely a huge supply and demand curve right here, right this area. You can see it off of this anchor bar here, and you can see it off the bottom of that anchor bar. Folks, this is where they're going to buy it if they're going to buy it, right? And the odds are pretty good they're going to buy it here. And you can see as it tiptoes in there, volume isn't heavy comparatively. That's the buy area. So yeah, you got the multiple swing point break that brings it back fast and furious. You get 3 to 4 bars in this case. That's probably all it's going to do, and it's going to try to shoot back the other way is what my take would be. And then it will try to do a retest regen off whatever is the lowest one, which looks like this one, right? And so if it comes back within 6 bars, it can make it to the top side. Now this one, in this case, is actually a little bit negative because it's already got 5 bars. It's got to get up in there tomorrow to make the 6th bar, right, and get back inside. And so you really want to see it trade back up there tomorrow, get inside this bar, which says it can get back to the top. If it doesn't get within 6, odds are pretty good it won't get that deep, right? It won't get very far. Okay, so I don't know, a little tutorial there. Good question and good chart to talk about. While I have a few minutes here, I want to talk about something else, and that is that one of the things, and I don't take your time and try to program sell my program, so to speak. But we really do have tools, and some great tools, right? And these tools, if one of the things I've shared, for example, is my second quarter earnings board, and this particular board, I've got all the earnings that I've gone through, right? And I've noted all the ones that are the best setups. And what I do, and one of the things you can do with this particular tool is you can build, and I'm going to log out of here and log back in as myself. You can build a set of tools, a set of watch lists that have the anything you want, right? So in other words, one of the well, there's a lot of things to talk about, but one of the things I do is I have, as you probably already know, on the trading cube, right? On this trading cube, if we put a symbol in, let's just put Alcoa, for example, and if we pop all the way down to the bottom, it's going to tell us when the earnings date is, right? All of these are in a database, of course, right? So I can easily pull all of those, create a list for myself, right? And maybe we'll try to open that up one of these days so that you can do it as well. But once I have that list, I can go to a watch list. I can easily browse and import that watch list. And so in this case, I would come in here and, wherever the watch list is, if it was there, then I'd grab that thing, I'd import it, and then all those symbols would automatically appear here. Now the great thing about the tools, if I go like to the temp, I use temp myself for questions you asked me. So somebody asked me about DBA last week. So when I come into here, if I hit that, it's going to pop up 3-4 windows. It's going to give me the cube. It's going to give me all 4 of the charts across all the time frames, right? And then what I can do is spread these out where I want them on my palette, and then I can flip through these guys, bang, 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 and I can do 100 charts in 20 minutes, or even less, actually 10-15 minutes. And so I can examine all earnings after they've happened, post earnings plays, build a watch list of them, and then what's even better is once you have that, then you can go into Stock Monitor. And Stock Monitor will take every one of those symbols that you have in that watch list, right? So if I take that same watch list, temp, and pull it up, it's going to give me basically a trigger anytime these trigger on a retrace or a breakout. So every morning, I don't have to look at the all 100 stocks or 50 or whatever it is. I've only got to look through the small list that it creates for me. And that is like an alarm. And you don't have to manage the alarm, changing it all the time. All you got to do is manage the watch list. So, a promo, I have a few minutes here to show you the kind of tools that are available, very powerful tools. If you're not a member, you might want to check it out. You can get 2 weeks for free. Just pop over here at the free trial and check it out. It's a good deal. All right, well, I don't see a question here. It looks like no questions up there, so I'm going to call it a night. I'm 2 minutes early. I don't get to do that very often, huh? Folks, I think you're going to see a pretty good bounce tomorrow probably, and they're going to try to break this out again. I don't know if it's going to get too far, but they sure as heck going to try. And we'll have to see what kind of volume comes in as we try to break out, because that's going to be the key, is do buyers show up at higher prices? That shows you conviction. If they do, then we can probably stretch some more. If they don't, right back the other way again. Have a great night. Thanks a lot. And I'll see you next time. Have a great one, folks. Take care.